welcome everyone. Today I'll be showing you accounting basics. So we'll be learning debits and credits, as debits and credit are the key language or basic fundamental to accounting. Let's change the color to blue. So what really is debit and credit? In any transaction, there will always be debit, which will equal to credit. It's also a double entry accounting system, double entry bookkeeping accounting system. So it's very important to identify what is debit and what is credit. So I have a formula here to identify debit and credit. So debits are the receiver. Debit are also what comes in, and debit are all expenses and losses. So when someone receives something, it's a debit. When it comes to you, it's debit, and all expenses and losses are considered as debit. So either of these three will make debit. And to identify the credit, the formula is just the opposite of debit, which is the giver, what goes out, while all incomes and gains. So in order to identify debit and credit, you can easily identify from this formula. So now let's go to some of the examples. Harry invested in a business with $10,000 in cash, and the business issued common stock. So let's look at this scenario and identify debits and credit. So here, what came in? So cash came in the business, and what went out? Common stock went out of the business. So the debit is what comes in. So by issuing a common stock, cash came in, cash of $10,000 came in, so it's debit. And what went out? Common stock went out is credit. And always debit is equal to credit, and we write debit first and credit second. It's also a way of preparing a journal entry. Next example, to identify debit and credit: purchase $500 worth of office supplies on account. So if it says on account, that means we did not pay it. We need to pay in the future. So here, what came in? Let's look at the formula. What comes in is debit, the receiver. So what came to us is office supplies. So office supplies is debit, which is $500, and let's look at the formula again. What goes out is credit. So what went on account? So accounts payable will be credit. Since this is in account, we need to pay this in future, so accounts payable will be credit. But in case if the transaction was done by cash, then instead of accounts payable, it will be cash over here. Let's need the shortcut of accounts payable, APR, accounts payable. Decrease the font so that you can see. 16. Oops, let me increase. Okay, now it's better. 20. Yeah, it's better now. Yeah, purchase $500 office supplies on account or cash. So if it says on account, it will be accounts payable, and if it say by cash, then since cash went out, it will be cash will be the credit. Let's do one more example to identify debit and credit. Paid salaries to staff, $2,000. So over here, salaries are expense. Since salaries are expense, all expense and losses are debit. So we can do salaries expense debit, which is $2,000, and we need to credit cash, which is $2,000 credit. So this is how we identify debit and credit. Thank you for watching this tutorial.